Hello students, today we are going to see a problem based on accounting equation. So as you can see, assets is equal to liabilities plus capital. So we have seen the duality principle which states that after every transaction the debit should be equal to credit. Okay, now we don't know what is debit and credit, but let us see how these transactions will affect the accounting equation. Okay, so assets is equal to liabilities plus capital. So what you are supposed to do is, this is a statement. So as a problem, you will get some transactions and you will be asked to find out how these transactions will affect the accounting equation. So you will have to draw like this. So this is being done in Excel. It's a bit difficult to do in PowerPoint. So I thought I'll do in Excel because for calculations, Excel is better. No? And you'll get some or you'll get familiarized with Excel also. Most of you will be knowing MS Excel, but understand that even in industry also, whatever field you may choose, Excel is an important application tool. Okay. So here I have already done this problem and you can see that you will have to draw like this. That is a big column for transaction and assets, there will be a column. Liabilities, there will be a column. For that plus, you need not have a column, okay? But for calculation, no, I gave a separate column for that plus. But when you do it in your notebook, you can just add it along with liabilities or capital. Wherever you may put that plus sign, okay? You need not have a separate column for plus, okay? So assets is equal to liabilities plus capital. The first transaction is started business with cash rupees 10,000. That is 10,000 is the amount that the proprietor is introducing into the business. Okay, so he is bringing that in the form of cash. So it is clearly mentioned that he started business with cash rupees 10,000. So we'll have to find out the two accounts which are getting affected by this. Okay, so even though we have learned assets, liabilities, capital, expenses and incomes, in accounting equation, you can incorporate expenses and incomes along with capital. That is, whenever you are having an expense, you can deduct from capital, and whenever you are having an income, you can add that with capital. Okay. So you will have only three heads here. Assets is equal to liabilities plus capital. Understand that actually this is not part of double entry. That is when we are learning accounting, we are learning in such a way that it can be applied in the practical situations also. But accounting equation is just for understanding the accounting principles, the duality concept. It is not part of double entry. That is, if you go to a business organization, you cannot see accounting books. This is just for understanding. Only in the second module, that is only from second module onwards, we will be doing the practical things related with accounting. This is always keep in mind, this is not part of accounting books. Okay, this is just for understanding these concepts. Okay, started business with cash rupees 10,000. So what will happen? Cash will increase and therefore the capital will also increase. This person has brought amount of 10,000 for his capital. That means cash is increasing, cash increase, no? And as a result, his capital also increase. So you can put that 10,000 under assets. Cash is increasing, and liabilities, external liabilities, no change. So you'll put it as 0 plus capital is 10,000 increase. So see, the accounting equation is satisfied. If you take the total of assets and liabilities plus capital, it is the same, no? 10,000 is equal to 0 plus 10,000, it's 10,000. So that is the end result of that. So since this is the first entry, you don't have to find out the after effect of this particular transaction, because that is the only transaction there. Okay, so we are just putting it like that, and we are moving on to the next transaction. Next is the purchase goods on credit from B Das rupees 1,000. Okay, so from B Das is a particular person from whom you bought goods. That is, he's a creditor for you. Okay, you have purchased goods on credit from B Das rupees 1000. So assets, under assets you will add 1000 because you bought goods worth 1000. So 1000 will be added to your stock assets. And liabilities, you didn't make the payment, no? So you have to make payment to B Das. So that means he is the creditor there. So you'll have to make payment to him. So liabilities is increasing. So 1000 rupees under liabilities also increased. No change in capital. It's not a capital item. So no change in capital. So capital is 0. So after this transaction, you can see 1000 is equal to 1000. And after the second transaction, you will find out the new equation incorporating the first and the second transaction. So you are taking the end result of these two transactions in the books of accounts. So total you will find out what all assets you have. So new equation is total 10,000 you already had as cash, now stock 1,000. So now it is 11,000. Okay, I hope you understood that. Liabilities only 1,000. So in the previous one it was 0 plus 1,000 1,000. Capital 10,000 plus 0 10,000. This is clear, no? Next is purchase furniture for cash rupees 2,000. You bought furniture for cash rupees 2,000. You paid cash and you bought furniture. So furniture is coming in. So asset is increasing. So plus 2,000. Furniture is increasing. But what about cash? Cash has decreased, minus 2,000. So plus 2,000 minus 2,000 is 0, no? It has affected only the asset side. So it is 0 and liabilities plus capital is also 0. So see, the accounting equation is satisfied. 0 is equal to 0. Now, new equation is, you will have to find out that is the previous new equation plus this transaction effects. So 11,000 was the new equation, previous new equation, and 11,000 plus 0 is 11,000. And of course, there are no changes to liabilities and capital. So 1,000 plus 10,000. Purchase goods for cash rupees 3,000. That is, you bought goods. If you are purchasing goods, stock will increase. Okay, you will record it as stock because you are going to trade those things, or it can be raw material as well. Anyway, stock will increase. So purchase goods for cash rupees 3,000 plus 3,000 stock, and you paid cash, so minus 3,000. So that is also getting cancelled. So plus 3,000 minus 3,000 is 0. It's not affecting liabilities and capital. So new equation is also the same because this transaction hasn't changed the values, no? Plus 3,000 minus 3,000. So it has become 0. So 11,000 is equal to 1,000 plus 10,000. Now, sold goods for cash rupees 4,000, cost rupees 3,000. That is always, most of the times we'll be selling at profit only. So we sold goods for cash at rupees 4,000, but that was costing us only, that costed us only rupees 3,000. That is, now we have already purchased goods on credit and cash from various people for trading purposes. You can refer to the previous transactions, and that is being sold now. Okay, that might be procured at a lesser cost, and now you are selling at a higher price. So it is sold at 4,000, cost is just 3,000. That means 1,000 you got as profit. It costed you only 3,000, but you sold it for 4,000, so profit. Okay, so from stock you will deduct only 3,000 because that is the value of the stock you sold, minus 3,000 from stock, and plus 4,000. You got 4,000 by selling it, no? So plus 4,000. No change in liabilities, but capital, profit is increasing. So profit has increased. So capital will be, that is, to capital you will have to add it. So plus 1,000. That is the profit element. Okay, so you will see 3 effects for this. But anyway, the effect is the same. If you look at the asset side, it is just 1,000 minus 3,000 plus 4,000 is 1,000 only, no? On the other side also there is a change. There is change, but only for 1,000. So let us see how the new equation will become. Previously it was 11,000. Because of this change of 1,000, so plus 1,000, so it became 12,000. Liabilities, it's the same. Capital, it was 10,000 plus 1,000 now, so 11,000. Okay, so 12 when you add up, it's the same. Both the sides are 12,000 now. Paid cash to B Das rupees 500. So refer back who is B Das. B Das is the person from whom you have purchased goods. So now you have purchased goods worth 1,000 from him, but now you are paying only 500. So what will happen to cash? Cash will decrease. So cash is decreasing. So under assets minus 500. When you recorded that liability in the second transaction, you wrote it as under liabilities 1,000. So from that liability, now 500 is decreasing because you are paying amount, no? So minus 500, no change in capital. So take the net result. So 12,000 minus 500 is 11,500 and 1,000 minus 500 is 500. And now paid salaries. Salary you are paying. So I told you whenever you are incurring an expense, that should be deducted from capital. And when you're paying salary, cash will decrease. So minus 500 cash, no change in liability. Minus 500 from capital because it's an expense. All expenses should be deducted and all incomes can be added. Profit we added, no? So expense will deduct. Okay. So minus 500. And you will take the new equation. 11,500, 10,500. Received interest, rupees 400. You received interest. That means cash will increase. 400 will increase under cash. And it's an income, no? So it will be added with capital. So plus 400. New equation is 11,000 plus 400, 11,400. 500 is the same. Liabilities is the same. And capital is 10,500 plus 400. 10,900. And the final equation. Now all the transactions are over. You will see this first. This is the first question under accounting equation. So all the transactions are over, and you will take the end result. That is the final equation. Just total it up. Asset side is 11,400. Liabilities 500 plus capital 10,900 is 11,400. So 11,400 is equal to 11,400. What does this convey? That is after we saw that after each and every transaction, the assets is equal to liabilities plus capital. Later you will find out that actually assets represents the debit and liabilities plus capital represents the credit. Okay, so debit is actually equaling to credit. So that you will see later. You don't have to worry about that. Now this is just for understanding that after every transaction, the accounting equation is satisfied. Accounting equation is assets is equal to liabilities plus capital. Please do this in your notebook. Thank you.